SPY super system. It's a piece of software that runs on Thinkorswim. Also runs on Ninja. I run it on Thinkorswim. And this is what it looks like. I'm going to show you a lot of these charts, but it looks like this on Thinkorswim. Now, you don't have to trade off of Thinkorswim. I don't trade off of Thinkorswim. I trade off of Tradier. But the indicators and the setups that we're looking for trading stocks and options, I come off of the SPY super system running on Thinkorswim. So I'll show you that. Again, it tracks institutional money flow. This is really important to understand how important that is. Okay, and this is just a graphic of what the alert service looks like. You get the SMS alerts. We call it Compass. Used to be called the SPY super system. Used to be called the Compass, but it's been enhanced several times, and so now they call it the SPY super system. The basic components are the same, but we've added scanners and some additional indicators that we can use to perfect the trading a little bit more. All right. So again, this is what it looks like. Comes on your phone. I'm on the alert service, so I know how fast they come, and they come pretty quickly. I get them in about 10 seconds from the time I send them out. Okay. Now, if you've been at a webinar with me before, you've seen this before, but bear with me because this is really, people don't, a lot of traders don't understand how important this is. This is what drives the market. Okay, so the market consists of retail traders such as myself and most likely everybody here with these little marbles. And there's millions, tens of millions retail traders. But it's important to understand that when retail traders are in the market and there's no particular force to the institutions, these are the institutions, this big marble, these are what drive the market. Now the institutions don't have to be pushing in the same direction. There could be differences in institutions, and you're not going to have a trend when that happens. But when you've got enough money coming from institutions that are pushing a stock or an ETF or whatever, or futures in one direction, that is what drives the market. We as retail traders, if we're in the trade and the institutions are not in the trade, all we do is cause chaos and chop. Market is just going to chop around. You're basically getting killed by 1,000 paper cuts as the retail traders just move the market up and down and up and down. It's chaos and it's chop. And when the institutions aren't in the trade, we don't want to be in the trade. So we use what the institutions are doing to guide us. That's one of our main criteria. Now the institutions are made up of investment banks, Goldman Sachs, JP Morgan Chase, Morgan Stanley, HSBC, lots of big investment banks, who by the way have two different types of trading. Well, they do investing, but on the trading side, they have human traders. They have traders that actually push buttons, push mouse, and click keys to trade. But that's not the majority of the trades. Most of the trades that are being done by the institutions are being done by algos, programs that are written to look for specific setups, specific criteria, specific news, and they identify those situations and then they trade it. All right, and it's very easy to see. We had a jobs report on Friday morning. If you looked at the jobs report on Friday morning, when that jobs report came out, about a millisecond after the jobs report came out, the market started screaming up. It started moving way before anybody could even click on a mouse to do this. That's the algos reading the news and doing the trading. And that happens when the Fed is out there, when any news event comes across. But the algos also look for things like MACD crossovers, because they know retail traders use MACD crossovers. And they'll identify a MACD crossover. They'll actually create the MACD crossover, and then they'll flush it back down again so that they trap as many retail traders as possible in there. And our job as retail traders is to know what the institutions are doing and follow them. Okay, so and as well as institutions being investment banks, there are also hedge funds. There's hundreds and hundreds of hedge funds. They have billions of dollars to invest. So they're part of the institutions. So is pension funds, police pension funds, state worker pension funds, fireman pension funds. Again, more billions of dollars. And lastly, you've got mutual funds, T. Rowe Price, Vanguard, all the big mutual funds. All of these folks is what make up institutions, and that's what we want to know when these folks are in there in a big enough quantity to drive the market. All right, so that's very important to understand. That's why understanding what the market's doing and what the institutions are doing is critical. All right, so the rules to trade by that we have in the room, a couple of them. We trade the best and skip the rest. This means we're just looking for the very best setups. We're not going to be in a trade that the institutions aren't in. We're not going to be in a trade that's just chopping around back and forth above and below an indicator. We're looking for the best and we're skipping the rest. And this is probably the most important thing, because if you can skip losing trades, so you trade fewer trades, but you're only taking the very best ones, and you can identify when not to take these trades. This is just a bigger help as finding profitable trades. All right. Second thing is, and I talk about this in the room every day, our objective is not to make trades. Our objective is to make money. And the whole idea of this is to keep traders from over trading, from suffering from FOMO, chasing a stock that's moving up really fast on the open, and then grabbing it right near the top and then have it reverse on them. Our objective is not to make trades, is to make money. Just because you haven't made a trade in 2 or 3 hours doesn't mean you're doing anything wrong. It probably means you're doing something right, because if you keep that in mind, your objective is not to make trades. This is very hard for most retail traders to overcome, because they do not have the patience to be able to watch the market for an extended period of time. Okay, so what we do is, to do this successfully, we maintain discipline. When I say discipline, that means we learn and follow the process. And the process is nothing more than the criteria that we use for finding the highest probability trade setups. So we maintain discipline, and we only take trades that meet our criteria for what the process is, and we'll go over those. And we have to like learn that process and internalize it, and then we trade. That's how we're going to be how we're going to be making our money, right? So we learn and follow the process, and we can remain patient. Wait for stocks to come back to you before you take the trade, right? And we'll show a lot of those. This is really important. But this is what separates winning traders from losing traders. Not over trading, and being able to remain patient, and having a specific process, having a discipline and a process that they learn and follow. All right, and ours is it's pretty simple, but it's very, very effective. All right, so we as retail traders, we need an edge over other retail traders. Remember, we're not trading against institutions, we're trading with institutions. We're going to take our money from retail traders who do not have as good information as we do, who don't have the same kind of charting information as we do, who don't have the SPY super system, they don't know when institutions are in the trade. Those are the people we're going to take money from, right? And our edges are, we have the SPY super system software. This tells us when institutions are in the trade. Pretty simple, very, very critical. We also trade relative strength and relative weakness, and this is something that a lot of retail traders don't understand, or they don't use. And relative strength is relative weakness is, how is your stock that you're thinking of trading, how is it performing relative to what the S&P 500 is doing, what the SPY is doing? If the SPY is moving sideways and down, and you've got a stock that's stacking green candles, you've got relative strength. That's going to increase your edge, and vice versa on the short side. If the SPY is moving sideways and up, and you've got a stock that's stacking red candles, you have got relative weakness. That increases your edge, right? So that's an important element. And very few retail traders understand this or use this. And we want to trade with the market trend. This is really critical. On days when you've got a choppy market, then it's much more difficult to trade. You can't stay in the trades as long. You've got to exit with smaller profits, because it's likely to reverse. When you've got a trending market, when the market's been trending up all day or trending down all day, then you can stay in the trades longer. You can take bigger size, right? So you increase your profits. So it's important to be able to identify what the market's doing. That's called market context. Knowing what the market context is by just looking at the 5-minute chart is really important. And then the last thing is to buy near support and sell near resistance. Again, we're trying to keep people from getting into trades when it's far away from a support or resistance level, and then have to have their stop way down back down to the support level. Wait for it to break through support for the upside for a long, or break through support to the downside for a short, or break through the resistance for the upside. All right, and we'll go over exactly how we do that. We have a very specific methodology for doing that. All right, and so the compass system, which is out of the SPY super system, it identifies the highest probability trade setups while sidestepping setups that look good but don't often succeed. It also does this identifying when institutions are driving the move and when they're not. This is really important. It analyzes quite a bit of complex data. It analyzes momentum, it analyzes trends, it analyzes money flow, it analyzes all these things across multiple time frames, and then it displays that in an easily identifiable color format, which I'll show you a lot of these. Okay, and the visual element makes it possible for even new traders to find high probability trade setups. Okay, so that's what the SPY super system does for us. This is how we get an edge over retail traders. We're only taking trades that are being driven by institutions. This is important. Trading stocks that have relative strength or relative weakness, and trading in the direction of the overall market. If you do these three things, you'll be ahead of about 96% of the retail traders in the world. They don't know to do some of these things. They trade on emotion. They have some crazy strategies that they've read about somewhere that they don't work. So it's very, very important to be disciplined and follow what we know works. It gives us an edge. Trades will be supported by institutional buying or selling. Again, it keeps coming back to that. They'll be outperforming the index, the SPY, either to the upside or to the downside, and they'll be moving in the direction of the overall market. All right, very key. This is how we learn to trade. Now, this I'm just going to show you this quickly, but we're going to get into a lot more detail. This is what the SPY super system looks like on Thinkorswim. This is what I use. This is what I use to find high probability trade setups, and you can do it on 5-minute. You can do it on the daily. This happens to be a 5-minute chart of the Qs right here. But these are what we've got on here. This is the long-term trend. Okay, red and yellow is bearish, green and blue is bullish. That applies to all three of these. Long-term trend, multi-time frame trend. If this was the 5-minute chart, this is looking at the momentum across the 5-minute, the 15-minute, and the 45, and wants to see if institutions are pushing the momentum up in the same way and all across all those three time frames, are pushing it down. All right, now this is current time frame momentum. This is a critical one for intraday trading. If you're trading intraday, just looking for quick trades, looking to trade like we trade the SPYs and the Qs all the time off 5-minute charts. But you can do this. I did this yesterday on Tesla off the 5-minute chart. This is a current time frame momentum. Same colors apply. Red and yellow for short, green and blue for long. And this is what I use for intraday trading. And this is the actual oscillator that drives these colors. It's a Laguerre. However, it's modified. It has the divergence stripped out of it. It's just pure momentum, right? That's all this is. And I like having the oscillator on here because this is what really drives the market. This is what drives my trading. But this kind of tells me when this goes from red to blue, I can see what kind of a move up I'm getting in the oscillator. Is it really steep or is it really kind of flat? A steeper move up will tell you that the trend, the swing to the long side is going to be stronger. Now on the chart, as far as indicators are concerned, we have the VWAP. This is the volume weighted average price. On the 5-minute chart, this does not apply to the daily chart. This is a very critical level. This is what all the institutions use, this level. And we use it all the time in our intraday trades. Volume weighted average price, very critical. This is the 15 EMA. It's actually an EMA of an EMA. It's a smooth EMA. This becomes a support resistance level. And then if the price is too far away from the VWAP, this is what we use for support and resistance levels. These are our entry levels for the intraday trades that we take. All right. This is called a pivot point. I have just one pivot point on the SPY super system. It's white. It isn't always there. It shows up when it's applicable. But it's a very strong level, and you need to be aware of it if you're in a trade, because it likely is going to stop the move to the upside or to the downside. All right. So and we have a SPY super system puts these little arrows in here. These are called pop out of the box symbols. These are telling you when you're breaking compression to the downside, and when they're red, they're breaking compression to the upside, or pink. All right, you'll see that on our charts. But that's what SPY super system software looks like on Thinkorswim. This I run this in the room every day. I have it on the screen every day. If you're in the room, you can see it all the time, all day trading. And if you have a special stock you want to look at, you just tell me, and I go ahead and put the ticker up there, and we take a look at that. But if you own the software, you can do all of that yourself. Okay, all right. And this is just a couple of funny things. The whole idea here is in the room is help people become more consistently profitable traders. That's to give, people want to get good trades. I understand that, and they want to make money, and that's our goal is to give them good trades that they can make money with. But it's also to help them become consistently profitable traders. And if you trade off emotion, you're trading off of whims, you're trading off of what you think, not what the market's actually telling you to do. This is what you're going to end up. And this is the difference between not having a discipline like we have, not having the SPY super system, not having the disciplined approach to trading, between this guy and this guy. That's the difference. And they're funny, right? But they're funny. But listen, if you've traded and you've had things go against you badly, you know exactly what it's like. And it's really important to try to trade with as little emotion as possible. And I just kind of get into this for a second. I do not trade, don't trade your P&L. We should always be just trading off the technicals on the chart. That's what's going to help us become profitably successful, successfully as a profitable trader. If you're trading off of emotions, and anytime you've got too much risk on, or you're acting like this, then your trading is going to be destroyed. You're just not going to be able to do it. And the way I actually traded, when I started to learn how to trade, one of the best pieces of advice I ever got was to treat the trading like you were trading a video game. I don't look at my P&L during the day. Never look at my P&L. I mean, I know if I'm up money, if I'm looking to get out, I'll take a look at it and set a price target for my exit if I'm going to get out of the trade. But if I'm not thinking about getting out of the trade, I don't look at the P&L. I'm just looking at the charts, and I'm looking at the indicators and the colors on the chart. But the advice was treat it like a video game. Pretend you're just trading against a bunch of other people who are trying to take money from you, and you're trying to take money from them, and you just want to get better at it than they are. And if you treat it as a game, it helped me at least take some of the money out of the equation. All right, so that's what we're trying to do. We don't want you to be like this. We want you to be like this. And this kind of just, before we get into the Heiken Ashi, the process precedes results. I suppose it sounds a little complicated. The process is the criteria that we use to take trades. So you need to learn that. In other words, the process is going to become before profits. You've got to learn the high probability trading criteria and strategies. Not that hard. It's just a matter of learning them and sticking to them. And that's called the process. And the profits will then follow. The profits we get is because we're following the process. Okay, this is critical and important. And again, focusing on your P&L without having a solid process to follow is going to end in failure. I've seen that thousands of times. All right, if people judge their progress by looking at how much money they're making or how little money they're losing, then you're looking at the wrong thing. You need to be having focused on the process, because you can have a trade that's a terrible trade and you make money on it, and you can have a trade that's a really good trade that you lose money on. It's got nothing to do with the P&L. It's all about the process. All right, and that's what we're going to talk about here. Again, and this is kind of just something I just threw in here. I don't know if you've ever heard of an OODA loop before. This is a fairly well-known thing. But an OODA loop is the process, the mind process, or the process your mind should go through to find a trade and take the trade. It's observe, orient, decide, and act. That's what OODA stands for. Observe. So you use your scans and your watch list and any news that's going on to identify prospects. Now you've got a couple of trades you want to perhaps take. Then the next one is orient, and that identifies whether the prospect meets the high probability criteria on the daily and 5-minute chart. It needs to meet them on both of them. Identify your support and resistance levels, so you know when you can get in and when you can get out. Know the next earning dates. You don't want to be in a trade over earnings. And check option chain for pertinent information, weekly or monthly expirations, bid-ask spread, etc. So once you've observed and you found some stocks, then you orient yourself. Then you decide, okay, which one? If I find 3 or 4 charts and I think this one's the best, you make a decision on whether the trade qualifies as a good high probability setup. And if it does, you take it. All right, make the trade. Try to avoid analysis paralysis. Once you've gone through these things, if you know the process and you have internalized it, when you get to this level, you'll be able to just take the trade. Okay, so that's the OODA loop. It's used in a lot of businesses. It's used in the military. It's fairly well known, but this is how we apply it to trading. All right, so this is what's called a high probability trade setup funnel. Here is our methodology. Here's our process. We look at the daily chart first. If you're going to go long a stock, now this doesn't apply to scalping trades or high probability intraday trades that are only going to last 2 or 3 candles, but this applies to anything else. A trade that you maybe want to hold for 3 or 4 hours or 3 or 4 weeks. You want the daily chart first. That daily chart needs to be aligned in the direction of your trade. And then you look at the 5-minute chart and try to find your best entry point for that trade. In other words, when the stock comes back to the VWAP and bounces, that would be a good 5-minute entry for a stock that you've confirmed is good on the daily. Right? This is number one. You want to trade with a trend, both the stock and market. This is the context, and this is important to understand. What's the market doing today? Is it trending up? Is it trending down? Or is it just chopping? If the price is going back and forth above and below the VWAP for an hour and a half, you've got a choppy market. Those are what I call, as a coach in the room, these are called LPTE, low probability trading environment. You don't want to be in very many trades when it's like that. And you certainly don't want to be making too much risk. So if you've got a good context on the stock, either up or down, then that also is a very critical one. If it's got a choppy market, you can look at the others, but just remember, it's going to be a little bit lower probability than it would be if the stock trend was moving one direction or the other. And then we use the SPY super system. And again, these have got to align. If you're doing a 5-minute chart, an intraday trade for 2 or 3 candles, just the 5-minute chart has to align. But if you're doing a swing type trade, which is like all day or a week or overnight, then the daily chart and the 5-minute, the daily momentum and the 5-minute momentum indicators have to be matched up. They can be matched up blue or green, or red or yellow, right? So that's important. So now when all of these are met, then you try to find the stock that's got relative strength and relative weakness. And then you move on to where the support and resistance levels are. Are we near support or resistance on the 5-minute chart? Are we too far away? If we're too far away, let's set an alert back to where we want to get in. Don't chase. That's basically what that boils down to. All right, so that's the whole high probability trade setup funnel. This is what needs to be internalized. You need to understand each one of these criteria and apply them. And it's really not that complicated. And this is just it written out. Again, highlight stock to be traded should have the daily and 5-minute chart aligned. The SPY super system indicators must align in the direction of the trade. Really important, right? And on the VWAP, again, when you're trading off the 5-minute chart, the stock price should be above the VWAP for a long and below the VWAP for a short. Okay. This is just going to cover these before we get into the Heiken Ashi. These are the strategies we use in the room. Mostly I use options. Sometimes I'll buy stock and sell stock, but we do straight calls and straight puts. We do straddles and strangles. These are non-directional trades. I did 2 straddles on 2 strangles on Tesla yesterday, both for really nice 40% profits. So these are what we use. This is non-directional. These are directional. We use debit spread using weekly options expiration. This is also directional. Debit spreads is you buy a call and you sell a higher price call to create a spread. It reduces the cost of the trade, and we use the weekly expiration because that's when we get our best ROI on doing these. All right, and we do time spreads. We do some of these. We had a good one this past week. Time spreads over earnings. This is just to capture the volatility crash. Non-directional. This is just to catch the high premium that's put into options when the premium comes out once the earnings are released. Weekly ATM strategy, have not been able to do very many of these because this is a trade that we take on neutral to bullish markets. We definitely are not in a neutral to bullish market right now. So I haven't been using these, but it's basically a way to sell puts against a stock week after week after week to bring in premium while holding a longer dated put to protect yourself. Okay, and then we do credit spreads to capture premium over a few weeks. We did a nice one here on Netflix last week, really nice one. We got $125 premium when we sold it, and we bought it back for $10 2 days later. So we collected a $115 profit in 2 days on a credit spread. Again, the credit spread is you're collecting premium when you put the trade on, and then you have a debit where you take it off. And then we do have a SPY super system. I'm going to get into this a little bit. This is a This is for very high probability trades to catch the moves in the SPYs, the Qs, or futures. You can use this for futures the same way. All right, and I don't call these out in the room. I do call them out that I see them as setting up, but I can't post them and I can't alert on them. They're way too quick. These are SPY super system trades. For usually I do it on the SPY or the Qs. They're only going to last 1, 2, 3, maybe 6 candles if you've got a trend. But a lot of these can be just 1 or 2 5-minute candles. But it works really well if you follow the specific criteria we have defined for it. Okay. And the alert service we'll just talk about briefly. It is designed for day trades and short-term swing trades. It's designed for traders who can't watch the market all day or don't want to. The alerts are going to be in the very highest probability trade setups. So we're looking for any trades that you get on the alerts. The institutions that when we take the trade, the institutions are going to be pushing that trade, right? And then we look at market internals to see if the number of stocks, volume of stocks going up is exceeding the number of the volume of the stocks going down. That's the market internal. And then I do some more technical analysis to find the very best ones. Okay. This is just my human. This is a Compass alert service. This is the equity curve, but this is from March 23 to June 24th. This is pretty old, but this is based on $2,000 per trade. This is pretty much what our equity curve looks like consistently. And this is it from Q4 to Q1. This is, and I did in here, I did include the SPY super system trades that I take. They're very quick trades. They generate nice cash, but there's a lot of trades in there. But it's important to understand when I get to them, I'll explain. My results for anything other than the SPY super system trades are going to reflect your results if you're in the room or on the alert service, because I take them, I post them, I put the entry price, the exit price. Everybody should be roughly in exactly the same position I am on those trades. And again, I take all these trades live in my live trading account. But the SPY super system trades, the results are going to be different between yours and mine because they're so quick. And a lot of people I know take way more trades than I do. Other people take less trades, so there's going to be some variation. But this was my equity curve for the Q4 24 up through Q1 of 2025. So a pretty 64,000, not bad. It's fairly consistent year to year. Okay, now we're going to go ahead and we're going to, before we go any further, I'm going to do the Heiken Ashi candles part of the presentation. This is educational. This is for folks that I'm trying to help you become better traders. All right, and if you haven't heard of Heiken Ashi candles, I'm going to talk about that. All right, so using the Heiken Ashi candles with the SPY super system. Okay, so let's talk about the candlesticks. I mean, if you look at the candlesticks, they don't look much different than regular candlesticks, but they're constructed completely differently. Each Heiken Ashi candle is created by using 2 candles, right? 2 candles in a specific formula for this. I'm not going to go into all the details of that, but the important thing, the first important thing to understand about Heiken Ashi candles, this is the most important thing. Bearish Heiken Ashi candles have flat tops. Bullish Heiken Ashi candles have flat bottoms. It's always the case. They'll have, if you've got flat tops, these are bearish Heiken Ashi candles. And you can see this trend. You see how you go to flat top, flat top, flat top, flat top. See that trend coming down. And notice that the next candle always starts in the middle of the previous candle. Always starts in the middle of the previous candle. All right, so you've got a flat top, flat top. So this is a bearish trend. You can see how much of a trend this is. You can see how easy it is to identify that trend right now. Right, and you notice you start to get these little wicks on it. All right, so it's not quite as bearish as it was. Not quite as bearish as it was. Candles are getting smaller. Then you get another flat top candle. That's a continuation of the bearish trend. And another one. What we're looking for in the trading that we do is obviously we want to be able to trade a trend, but initially we want to be able to find a Heiken Ashi reversal. Where is the trend reversing so that we can get into it at the earliest possible point, but have it confirmed that the reversal has taken place. Now, the thing to understand on the size of the candles matter, right? When you're coming down in a bearish trend like this, and then you start getting these green candles with wicks and tails, this is a lot of indecision here. And then you get a flat bottom. Now, this is a bullish Heiken Ashi candle, all right? But you see how small it is relative to what we had here. So for me, you could take this trade, but I probably would pass on it. I would be waiting for something to show me a stronger reversal. So you get a in here with a bullish reversal. You see how we get flat top, dojis, flat bottom. That's a Heiken Ashi reversal to the bullish side. And there's another candle that's a Heiken Ashi, a bullish Heiken Ashi candle. Then we start getting wicks and tails again. Very choppy through here. Now we get a reversal to the downside, a Heiken Ashi bearish. Again, we're looking to try to go long the stock. So we're obviously not getting in here. There's a continuation of it. And then we get some green with a wick and a tail. But now look at this candle. See the flat bottom and look at the size of it. This is your Heiken Ashi reversal to the upside right there. That is where you would enter the trade. And on a 5-minute candle, by the way, once the candle has got a flat bottom, and let's say you got a 5-minute time frame on this, once you're about 2.5 to 3 minutes into that 5 minutes, this is very unlikely not to have a flat bottom. They typically don't reverse that quickly. So once you've got a flat bottom and you feel like you're getting close to the 5-minute time frame on it, you can go ahead and enter it. You don't have to wait for it to close on Heiken Ashi candle to the upside. Right. So this is a Heiken Ashi reversal to the bullish side right here. This is where you would be jumping all over this thing. All right, you're getting in, and we're assuming that some kind of, maybe the VWAP is down in here or something, but it's breaking through. And the reason these are so important is once you get a Heiken Ashi reversal like this with a flat bottom, it's 2 candles make that up. That becomes, whoops. Can anybody hear me? Perry says he can't hear me. Can't hear anything? Can everybody hear my sound? Yep. Everybody else is okay? All right. Thank you very much. I don't know if Perry. Let me just tell them all everybody else is okay. This will be recorded, by the way. Okay. All right. So this is what you're looking for. Okay. This is what gets you into a trade early, but confirmed, as opposed to taking standard 5-minute candles. Because then as 5-minute candles go through a resistance level, they can come back and test. So what this does is when you're entering here, it's much less likely to have a failed breakout. This confirms it much better. Gary, is this already started? Yes, let me just answer. Okay. Gary having some problems with the sound. All right, so this is where you get into trade. This is the way I use the Heiken Ashi candles the most. This is the biggest use of these is these Heiken Ashi reversal candles, right? Because if you get that and you also have a resistance level that was breaking through, this is a very, very key level. Now you see how you get a flat bottom, flat bottom, flat bottom, flat bottom, flat bottom. They tend to trend like this. Then you get some wicks and tails, but you probably haven't come back to your support level yet. And then another flat bottom, another flat bottom, another flat bottom. Now up here, this is where you're going to consider taking profits. All right, you see we're getting wicks and tails. We don't have Heiken Ashi reversals or Heiken Ashi bullish Heiken Ashi candles once it stops here. So you take your profits right here. But you've run all the way from here up to here. And you can see how smooth that trend is. Got one little blip in here, but that's not enough to get you out, and you follow it up. All right, so that's the thing I want you to take from this more than anything else. All right, Heiken Ashi bearish is flat tops, bullish is flat bottoms. The Heiken Ashi reversal looks like this, and you want the size of the candle that's creating the Heiken Ashi reversal to be at least as large, if not larger than the candles that were that created the original trend coming down. Okay. Now, this if you haven't used Heiken Ashi candles before in your technical analysis, you probably want to try to use them. It's easy to do. Okay, it's easy to set up on your chart. You just switch from regular candlesticks to Heiken Ashi candlesticks, and I'll show you how you do that in the SPY Super System. But again, the Heiken Ashi candles, it means average bar in Japanese. It smooths out the price action. This is really important. One of the biggest problems a lot of retail traders had is getting out of trades too soon. They get shaken out by these 5-minute noise candles. Candles just bouncing around, and they get freaked. They're freaked out. They're watching their P&L. The P&L starts to go down. They see a red candle. They don't know what to do. They exit. So this is going to help identify the trends and reversals, and it's going to be much clearer because it eliminates a lot of the noise. And it makes it easy to see trends. All right, we'll look at some live trades on these. Again, bullish Heiken Ashi candles have flat bottoms. Bearish Heiken Ashi candles have flat tops. Very important. Okay, this is how you identify them. If you've got something you can scan to look for candle tops on Heiken Ashi, like I do in TC2000, I can find Heiken Ashi candles just by looking for flat top candles and flat bottom candles. And again, bullish trends will have flat bottom Heiken Ashi one after another. Bearish trends will have flat top Heiken Ashi candles one after another. Okay, and we talked how they will reverse. Again, we talked about this reversal. I'm going to just let you read this when you get this. This is something I did in Reddit. I wrote this several years ago on Heiken Ashi candles, but it's important to try to get as much detail as you can. But I don't want to take up the whole afternoon on these, right? And again, once the Heiken Ashi reversal, the first thing needs to be true is the height of the Heiken Ashi candle has to be at least as large, preferably larger than the prior candles that occurred prior to the reversal. If they're small, then what you do is want to wait for a couple of them to do. Can Heiken Ashi candles be based on Renko bars? Yeah, I don't know the answer to that one, Dave. I don't know if because Renko's kind of a different way to judge price action. So I don't know. I've never tried to do them on Renko. Eric says the organizer has turned off the sound. Everybody's got sound, so he doesn't. Okay, so let's continue here. And again, anytime you're in any of these trades, by the way, it's really important to check for any nearby support or resistance levels that's going to limit your potential gains. If you're taking a trade, even if it's an intraday trade, and you're looking at the daily chart and you see the 200-day moving average is 10 cents above where you're at, and you're going long, you don't want to take that. You don't want to take a trade that's going to run into the 200 daily moving average here in 10 cents. You're limiting your profits. All right. And we'll continue here. We'll get that. So this is the introduction to them again. They involve from Japanese candlesticks. They combine the open close data from the previous period with the open high close low data from the current period. That's the calculation that how it's done. Again, it does minimize noise and it does create a clearer depiction of the prevailing trend. All right. Again, here we're going to cover this one more time. I'm trying to make sure you understand this. Understanding the trends. Flat bottom candles in an uptrend signal a strong visual of the current trend. All right, you see these flat bottoms. This is an uptrend on Heiken Ashi candles. This is a downtrend that's ending on Heiken Ashi candles. All right. This is a reversal right here. All right. So you could take it right here. But likely you would take it, especially if this is, for example, let's say this is the VWAP or one of your indicators, one of your indicators that you're trying to break through some sort of a resistance level. This is probably where you take it as it goes to flat bottom candles and breaks through the indicator. And then you go ahead and write it up, or the moving average, whatever it happens to be. But you see how nice this trends? No reason to get out of this. You have to kind of watch it here. But to see what the next candle does, flat bottom, flat bottom. Now we're getting some reversals, and then you get a flat top. You're out right there. That is your exit for that trade. You went from a bullish trend to a Heiken Ashi reversal to the bearish side. All right. That seems pretty clear. Again, a series of flat bottom candles in an uptrend signals a strong visual of the current trend and strength. Okay, and it's interesting to understand one other thing. A lot of folks, when they see candlesticks, bullish candlesticks with wicks on the top, what's in standard candlesticks, the wick on the top means that it's getting a little bit weak. because typically what happens is with a wick on the top, if you're looking at a single candle, that means the stock ripped up here and then the sellers came in and started to drive it down. That's not how these wicks work on Heiken Ashi candles. Heiken Ashi candles that are flat bottoms with wicks on the top are stronger even than ones that don't have a wick on the top. All right. So again, this just kind of goes over what we talked about, looking for that Heiken Ashi reversal, because the reversal is the important thing here. So again, tips: examine nearby support and resistance levels, are important. Perry, it gives you a message that I am muted by the organizer. I don't see how I can be doing that. Hold on just 1 second here. Let me turn the sound on and off. All right, get the sound back on again. And I haven't muted anybody. Yeah. Yeah, everybody can hear me. Okay. I'll just tell him to change his audio inputs. I can't do anything about it. All right. So again, tip for using Heiken Ashi, I look for support resistance. This is true whether you're using Heiken Ashi or anything, but look for support and resistance levels. Those are what's going to tell you if you're close to a support or resistance level and how much room you've got. So how much profit potential do you have? Right? And align the trade with the current market trend, obviously, for increased success. Choose the stock with relative strength or relative weakness. This comes right off of our criteria, out of our process. I do look at Bollinger Bands to see if they're expanding. That tells you that you've got a stock that's breaking out of compression. And after I enter the trade, I do switch to standard candles if I'm thinking of getting out. Once I think I'm getting out, then I go ahead and switch to regular candles so I can catch the reversal on the first candle because I've got profits and I want to get out. Okay. All right, so there's a recap of it. It smooths out price action by reducing noise, makes identifying trends much easier, improves identifying confirmation of trends and trend reversals. This is the most important thing. And again, it helps identify potential exits when candle's body shrinks or reversal occurs. All right, so that's what it is. All right, this is kind of an Uber chart. I'm just going to show you some regular charts versus regular charts versus Heiken Ashi charts, and we'll show you the difference. And I'm going to go to some live charts, all right, so you can see. All right, so this is Uber regular chart, okay? Notice gaps. Here's an Uber Heiken Ashi chart. Notice no gaps, all right? So here's where your reversal is right here. You see this coming down and a reverse right here. And this is, by the way, the 200-day moving average, the 100-day, the 50-day. This is on my TC2000 chart. But this is where you would take a trade right here, and you get 1, 2, 3, 4, 5, 6, 7, 8 days of a run here in Uber on that. It's just pretty old, but that's the difference. So that see the candlesticks here with the gaps, no gaps on Heiken Ashi candlesticks. All right. Now I'm going to look at some Heiken Ashi reversals from Friday. A couple of things I want to look at here. I'm going to look at some live charts. So first of all, I'm going to go ahead and look at this is the Thinkorswim platform. This is our SPY super system on a live chart right now. This is Tesla from Friday, right, from yesterday. Now these are scans that come with the software, the SPY software, the SPY super system software. This is cascading up. This shows you stocks with relative strength on the 5 minutes, stocks with relative weakness on the 5 minute. This can be changed to daily, so can this. So you can look for swing trades using relative strength and relative weakness. But I'm going to move that out of the way so we can just see a clear picture of the chart here. All right, so this is Tesla yesterday on a 5 minute candlestick. All right, so if I'm watching Tesla here on a 5 minute candlestick and I want to go long or short, if I want to go short, which I did go short this, by the way, this is the 15 EMA. See the real red line? Right? The VWAP is not here. The VWAP's down here, so it's not in the way. So this here, you notice we went right here we went blue, and then we went red. So this is where I take the trade on Tesla. And this was at 1450, right? So about 250, this is actually where I took it. So it's coming off the 15 EMA, and I've got a flat bottom, flat top. I think these are Heiken Ashi candles. Let me see. This is how you change the, yeah, these are Heiken Ashi candles. That's how you change it, Heiken Ashi. So this was a Heiken Ashi reversal, but it was blue. Now I've got Heiken Ashi continuation. It's red. This is where I take the trade right here. And this is the trade I take. And I just follow this down. And once I start getting this green right here, I get up. You see how it came right down to the VWAP and almost stopped right on the VWAP. All right. All right. So it looks pretty good. And I get out, you know, when it started flattening out like that. But that was a nice trade. And that's a quick 5-minute trade. That's kind of a SPY super system trade. But I was looking for a Heiken Ashi reversal, but I want to make sure the institutions are selling it. If I go back earlier in the day, you can find some greens here. Look at this move right here. See this? This is not a Heiken Ashi candle. This is a Heiken Ashi reversal. This is a big Heiken Ashi reversal. This is where you would take it. See, it's green. Institutions are buying, coming off the 15 right there with a pop out of the box. This is a pop out of the box telling us that the compression is breaking. So you take it right here, and then you just ride this thing up. All right, so you can ride it up, up, and then you get up right up here. See how you're getting mostly Heiken Ashi flat bottoms here all the way, and then you get a reversal. Here's a Heiken Ashi reversal. You go right here, and then it goes back to yellow. So that's what I did on Tesla. Now we had one on as well as Costco. With Costco, we did on a daily chart because this was one that I took a debit spread on. All right, so let me switch to debit spread. All right, so this was Costco debit spread right here, and this is a daily. Now, if you look at the candles closely, you'll see the wicks and tails. See this candle right here on 5/1, May 1st, flat bottom. That's a Heiken Ashi reversal. Both the current time frame and multi-time frame momentum are still green. This is red, but I still took it because I like this setup, and both of these are red, blue, green. Actually, this shows me that a very high momentum, and I took it right here, and we took a debit spread on this. We took a 1,005, 1,010 called debit spread. Okay, 1,005, 1,010 called debit spread. So we took it here and we held it overnight. You see what happened in the morning? It actually pulled down in the afternoon. So we were down money on this, but the next day we got another flat candle. We like this. It moved all the way up to about 1,019. So I took our 1,005, 1,010 debit spread, and we got into that for I think $2.10, and we get out for $3.50 on this candle right here. And that's how I use it. I mean, it was a Heiken Ashi reversal candle on the daily, so I thought this was a good debit spread to take because it was very, very bullish on the regular chart. All right, so that's what Heiken Ashi looks like on the daily, and then you saw Tesla on the 5-minute. So that's what you're looking for. All right, that's what you're looking for. So let me just swing that chart over here. Let me pop in something else. Let me pop in a TC2000 chart. This is going to be a little bit easier to see Heiken Ashi reversals. Anybody's looking at the SPY, this is a SPY right here. Okay. This is a SPY daily. This was a correction. This was the tariff situation when they put tariffs on. Market fell apart. You notice all this, the big gap. This is when they paused the tariffs. This is the biggest candle I've seen since 2008 in the SPY. Huge. And you notice we traded inside of that candle for about 2 weeks. And then we broke out in the last few days. All right. And had another gap up here. And we're approaching this orange, this purple line, that's the 200-day moving average. So the SPY is trying to regain a bullish setup, but this is a tough trading environment right now. All right, so let's take a look at some Heiken Ashi candles on here. Let me go back to Tesla. This is Tesla. I'm going to switch it to the 5-minute. And here. And Heiken Ashi on the 5-minute. Right, there it is. So this was Tesla yesterday. It's the one I took. This is off my TC2000 chart, right? But I use the compass system or the SPY super system to make sure the institutions are in the trade. So in this particular case, I found them here. I took it right here as it broke down, right? So that was a nice trade as well. If I look at NTAP, And let's take a look at NTAP on the daily chart. With Heiken Ashi. What you see here is this reversal to the NTAP was right here. Heiken Ashi reversal, and it's stacking candles. And now we reversed again. So this was a nice setup for an entry on Monday. And if I look at the regular chart on this, what I see is that it just gapped up above the 50-day moving average, which is this red line. This becomes a nice trade with a resistance of 95.59. That's a nice Heiken Ashi reversal candle on NTAP. Okay, and there wasn't an awful lot of bearish ones yesterday because the market was so strong. But let me look at a couple more on here, and then I'll show you some trades that we've done recently on these things. And this is what I use on the SPY Super System all the time on the 5-minute chart. Okay. TEC, not really a great one. COUR, see, that's a regular chart. That's a Heiken Ashi chart. See the Heiken Ashi reversal right here? And that was earnings, and it just popped right up. Eli Lilly coming down, Heiken Ashi reversal on earnings, still bearish right now on Lilly. Is Ring, MBV, Shopify. It's putting in a little Heiken Ashi reversal candle, but it's in a fairly nice uptrend right here. And these are regular candles. See where it's going. See, this is what you need to know. Where's my support and resistance levels? All right, so that's what Heiken Ashi candles look like. And you can use them on the 5-minute. You can use them on the daily. I use them on the 5-minute when I'm looking at SPY Super System trades. Okay. Okay, so the SPY Super System, that's the Heiken Ashi candles. These are the results that we've had. And then we're going to talk about some more charts. Let me see if I have some questions here. Perry gets you get it automatically. All right. When I say on the Heiken Ashi you took it here, is that the beginning of the bar, middle close of the bar? I don't recall hearing you say that. Well, what I said was on Heiken Ashi candle bars, Doug, and we've talked about this a few times. On Heiken Ashi candles, once it gets, if you're on a 5-minute candlestick and you've got a flat top, flat bottom for bullish, and you're going through the VWAP, for example, if that is at least 2 or 3 minutes into that candlestick, you can take it there. You don't need to wait. All my trades, rest of all my trades, 3 days or less? No, not really. It depends on the market. The market we've been in here now for the last couple of months. I've done a lot of intraday trades, and I've done some overnight trades and a couple of swing trades. As the market gets better, again, when I say better, gets a trend, either a bullish or a bearish trend, then I'll be in a lot more swing trades, and I'll be staying in them. Usually something in the neighborhood of 2 days to a week to 2 weeks. A lot of that's depending on the market risk. Okay. All right, so here we go. This is the trade results we've had in the room in 2023. We made $2,000 in each trade. This is just an arbitrary number I use. You can use 1,000, you can use 500, you can use 10,000. But if you use $2,000 per trade, it produced 60,000 in profits. It's just a way to measure the results. All right, and in 2024, 55,000. So a little bit less than 2023. All of that is depending on what the market's doing. When the markets, we've got some decent trends in the market during the year, we can make bigger profits. When there's more choppiness, you're going to make a lot less money. Not a lot less, but you're going to make somewhat less money. All right, and this, by the way, I wanted to point this out. Back when that market collapsed on the tariff news, and then it rebounded again. These are the trades we had on. It was a week period, but it was actually a 3-day period where the SPY was down 10%. It was basically falling apart. We only had 4 trades on. That's it. These are the only 4 trades we had on. We had ABGO short, which we made 39% profit. We get in for 75 cents a dollar, $75 a contract. Get out for $1.04. We had Nike, and we got when they announced the tariffs, Nike collapsed. It was bearish anyway, and we were in it for overnight, but we kept it a couple of days. We got in for $2.85 a contract, and we closed for $9 a contract. This is the biggest trade I've had this year, probably last year too. we don't make 200%, 300% on very many trades. Very unusual. But again, that produced $4,300 in profits. This produced $754. We also were short Sarepta. Notice we were short everything. We did not have any longs on here. We were short Sarepta in 450, closed for 8. That was another 78% profit, produced $1,400, and then NNE, 25% profit, in for $1.80 out of 225. These are the only trades we had on during that time because we're only looking for high probability trade setups. This is a news-driven market. We're trying to keep our trade count way down because the news will come along during the day and just blow everything right out of the water. So you've got to be very, very cautious. And we took trades that we felt were good. So this was a good spell for us. We didn't take a lot of trades in April, but these were some good ones. These ended up in March and were closed in April. All right, so just kind of to roughly go through this, and I'm only spending a few minutes on the results that we've got here. But the whole idea of this is January 2024. The whole idea is to show you, yeah, that we made money. We make money most every single month. But these are the kind of percentage gains you can typically expect. Don't be expecting 400, 300, 200%. If you're looking for quick riches like that, this is not the way to do it. This is a grind out, make money consistently, month after month after month, grinding out 10, 20, 30, 40, 50% profits per trade. And that's what we did. We had 20 wins and 2 losses in 2024 January, 90% win rate. We had a loss. We had 2 losses. Gilead right here. That was a news event that nailed us. But we had 96% profit in Boeing. Right, so that's January. This is February. This was our best month last year. 11,745. If you put 2,000 into each trade, 24 and 2. The alerts, I separated those out. 20 and 2 produced 69.30. We take more trades in the room than we do the alert service. For simple reason is there's many trades we take in the room that are going to be too quick for me to alert on, or they're too late in the day. I can't alert on a trade at 3:50, 10 minutes before the market's going to close. But again, we have losses each month. Keep this in mind. We have losses. You're going to have some losses. This was May. Just kind of show some time spread results. Again, 88% win rate, 81% win rate in the room. This stays fairly consistent, but you can see the percentages: 24, 23, 30, 40, 27, 25. See, in a couple of losses, this is typically what we have. But even with that, 25 and 4, we still netted 75.90. All right. And actually, the alert service was a little bit better. We had 14 and 1. But these are the results that you're gonna expect. And it depends on the market. Right now, we don't have this many trades going on in April. I think in April we had 11 trades. That's it. 11 and 2, 13 trades. But it depends on the market. We have to depend on trading as much with the market as we possibly can. So when you get a choppy market, I have to cut way back down on the number of trades we take. Okay, so this was September. This was our only losing month last year in 2024. Again, 8 wins, 5 losses, 62% win rate. I think probably one of the lowest win rates I've ever had. But it was a choppy market. We didn't take a lot of trades. Lost 1786. The room was 8 and 4. Lost 295. And this is not big. I mean, this 1786 when we had 4,500 up in August, and then in October, we bounced back up to 7,400 profit. Again, 17 and 3. So this is typically what you're going to see. And again, I don't want to hone in on each one of these things. You can see what the results are. Okay, this is this year. I didn't go into the individuals. It's too much spreadsheet work to do. But January 15 and 3, 84% win rate, 31.35. February 16 and 2, 89% win rate, 3,800. See, these losses, these profits are not very big compared to what we do most of the time because this has been a brutally tough market. But we're still taking high probability trades and we're still making good money. March, and we just finished. We had March last month. Yeah, 20 and 4, 83% win rate, 827. April, 11 and 2. See how many few minute trades we take in April with all this chaos going on in this news-driven market. 11 and 2, 85% win rate, 54.17. All right, that's so far. We obviously just started May. All right, so as far as the alert service is concerned, so you see what you get. They're going to be alerted by SMS message. This is an example of the Nike order that we had. What you're going to do is when an alert goes out, you're going to get an alert with a stock symbol on it like that, the option strike price like that, expiration date like that, and then pay the price to pay. So Nike, buy the April 11th 67 puts for 285. There's your expiration date, at strike price, and how much you should pay for it. All right, this was the date that I sent it. And then this would be the second order. A second alert, you're not going to likely have an alert to tell you when to get out when you first take the trade. Then I sent another one which reconstructs the trade, but tells you sell order for $9, and then they were sold for $9 on April 3rd. That was the Nike trade. That's what you're going to get. You get an alert to get in, and at least one alert to get out. You might get an alert to get out, then they may have to adjust it either up or down depending on the market. Okay. All right, so how do we achieve these stunning results? Well, I've talked about this a lot. We have the software that tells us if the institutions are in there. We're going to go into some charts here to show you exactly how these trades come off. Well, again, we follow the process. We talked about that, what the criteria is. This is what we do. We're only taking trades that meet our criteria. That is discipline. That's what the discipline portion means. So we're able to identify when institutions are driving a trade and when the market internals are heavily bullish or bearish. We get bullish internals and the institutions are driving a trade, that gives us the best setup. I will take trades that the institutions are in and the market internals are neutral. I won't take them if the market internals are against me, but I'll take them if the market internals are neutral. And what I'm fusing for market internals is cumulative volume of stocks going up minus cumulative volume of stocks going down. You get a positive number, it's bullish, a negative number is bearish. Okay? And again, we only take trades when both of these are in a favor. Like I said, that's not necessarily true. I will take institutional trades if the internals are neutral. All right? And how do we do this? Basically, this SPY super system identifies when institutions are creating a trend. That's part of the process. Trading the trend, looking at what the SPY super system is, that is part of the process. And we do what's called triple screen assessment of momentum and trend. This momentum is really, really critical. But that's how we find if the institutions are in the trade. Right, so here's here's the chart I showed you before. These are the things that we use. Here's your long-term trend, multi-time frame momentum, current time frame momentum. Red and yellow for short, blue and green for long. This is the one you would use both of these if you're trying to do a swing trade. You use this one if you're an intraday trade for short trade off a 5-minute chart. Your VWAP, spot resistance level, all the institutions use this. This is critical. 15 EMA, all the institutions use that. That's another critical one. And here's your pivot point, and you pop out of the box, so your compression signals. That's all there is. That's how you find these trades, right? And I also have a new template. If you buy the software, you get this template, and you'll get this template. This template is for SPY super system methodology trades. This is if you're just trading a stock, or specifically the SPY, the Q, IWM, or the futures on a 5-minute basis for very quick trades. All you get is the current time frame momentum on this one. That's all you need with the VWAP, the 15 EMA, and your pop symbols. That's all. I take everything else out of there because this is what drives that trade. So for intraday trades, this is what you use. I mean, you can use it off of here. You'd just be looking at this one. But if you get the software, you'll get this template and this template. So depending on which one you want to use. Okay. This is a SPY super system trade up on the Qs here. You can see that as the current time frame momentum went from green to yellow, we're going from buying to selling. We take it as the stock breaks below the 15 EMA. See how it's right at the 15 EMA. Buy at support, sell at resistance. That's what we did right there. And then we just ride this trade down. That's where you would get into it. As long as it stays below the 15, you can stay in the trade. All right. That's the Heiken Ashi reversal right there. This is the results of the SPY super system. I'm just going to run through these quickly. These are the intraday trades on the SPY, the Qs, or the futures in the room. These things only last 5 minutes, 10 minutes, maybe 15 minutes, and sometimes 1, 2, 3, maybe 5 or 6 candles. But this shows you the results we've had with it. Very good results, but a lot more trades, obviously, because you can take 4 or 5 or 6 of these a day. But you're only in one trade at a time, and they're going to be very short duration. You have to watch these. This is only for people who are adept at trading, who want to be able to make some intraday trades and make some good money off a high probability trade setups. All right, so August 56, 6 and 2 made 8,200. Again, these are my results. You know, because I can't post these trades, they're too fast. I do let you know when the setup has occurred, but a lot of people who have the software are actually finding these setups themselves and trading them themselves, and they do better than I do a lot of time, a lot of cases. September 43, 40 wins, 3 losses, 2 evens, 2 break evens, 7 and 32. All right, so and there's October right there. And again, you're only going to have 1 trade on at a time, and they're going to be very short duration trades. Okay, this was November, 54 and 5, big month, 93.70, and December 69.15. A lot of losses here, but very small losses. Remember, when you're getting in with a trade right at the VWAP or right at the 15 EMA, as it breaks through there, if it goes below it, you're getting out. You're going to have, most cases, you're going to have a fairly small losses, you know, relatively small, somewhere 40, 50, 60 cents a contract. It's probably normal, depends on how big the candles were. But if you get some good runners, of course, you can make, you know, 110, 120, 150 dollars a contract. Just depends what the market's doing. All right, so those were the SPY Super System. This was the October, November, December. The SPY Super System profits right here, 48.31. Do not include this. These are separate trading methodologies, separate results. This is exactly, if you traded in the room, this is exactly, you should have got results almost exactly at this, because these are the stocks that I posted in the room and sent out information on. You would be taking exactly the same trades I did, right? 74.48. These are my profits on the SPY Super System results. But a lot of people like the SPY Super System, so that's why I'm highlighting it here. All right, November, you can see these yourself. Pretty big numbers, pretty nice numbers. December, nice number here, a little less down here, only 14 and 3. So that was our results for the last quarter of 2024. Again, this is my results from my trading on the SPY Super System. This is the room's results on stocks that everybody in the room had the ability to take because I post them and with all the information. Okay. So here's the SPY Super System trade. This is I don't got to beat a dead horse here, but here's the SPY Super System methodology. This is the current time frame momentum. This is all you're looking at. You're looking at that. You're looking at the VWAP for support resistance and the 15 EMA. This is where you would take the trade right here. See how it goes red selling, blue buying, breaks above the 15, the VWAP with a pop out of the box symbol. You take the trade right there, and you stay as long as it stays above the 15. You stay in it, and then you get out right here. All right, and that was $220 profit per trade. That's a pretty big trade. We haven't had any trends like that lately, but that was a pretty nice trade. Okay, and this was another one we took. This was just 2 candles. This was on 225, coming down below the 15. Goes red here. This is where I took it as it compressed and broke below the 15. I took it here, and I was out here. Okay, as it pulled down, I get out right here. $90 profit per contract. Same thing off the modified template that you get. Okay, so this is the entry right here, as it was yellow, coming off the 15. You get out right here as it came back down. You have to be fairly quick on these things, but this just shows the same trade off the modified layout. All right, here's a new template here for the SPY Super System trade. Again, see how easy this is to spot. Again, went to yellow here, so I didn't actually take it here because I could have taken it right here, but I didn't. It went yellow. This is where I spotted it, and I took it here and rode this thing up. All right, but that just shows you see how it stays green. All right. And this is a SPY Super System trade here. This was an 11.29. Again, compression, everything's green. The institutions are buying the heck out of this. This is before I actually had the oscillator on here. But this is the same setup. It's coming off the 15 with a pop symbol right there. Right? Pops up, moves up, goes along the 15. You get out $130 profit per contract. IWM, see, this is another one we take here. Again, there's your buy as it went yellow to blue. Take it right there off this 15 EMA, right? You could have bought it anywhere inside that candle. And then you just take this. It's not much of a move really, but it stayed above the 15. So I get out here for a $90 profit. So hopefully you can see how these work. I mean, this is it's red, current time for momentum is red. The institutions are selling. You're looking for a break off the VWAP. There it is right there. Popping down, you grab it right there. And as long as it stays below the 15, once the 15 pulls away, as long as it stays below the 15, you can stay in the trade. then you start to get this blue, but you start to get this reversing down here. This is where you would consider getting out, $120 profit, right? And this was 823. This was another big one. Getting back here, I'm going off the VWAP. Again, you see yellow and all red all the way across. Institutions selling all the way across here. So you just stay in it as long as it stays below the 15. It goes up and touches it a few times, but it stayed below it. It gets to the pivot point where you have to watch to see if it's going to break through. It did, and then I get out right down here. That was one of my biggest SPY super system trades. Right, IWM right here. So you can see, I'm not going to beat this to death because I think this one I put it here because I wanted to show you how this is red here, and you see how it's coming across. But where do I get in? So I'm not getting in here to go long. See, it went from red to blue. Buying's right here, and it broke above the 15. But notice it went right to the VWAP. I can't take it here. I've got to wait for it to break the VWAP. It's too close. I get a doji right on the VWAP. Then I get a breakaway candle right here off the VWAP, and it's blue, so they're buying. I can take it right there, and then I'm out right here. About 4 or 5 candles. Right, those are SPY super system trades. Right, IWM, same thing, just so you can, I didn't put any arrows on here so you can spot it. You can see the setup, but if you see the setups here, see it's green, 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 you're looking for a break. There you go, here's your break right there. You take it right there, follow it up on the 15. You can get out anywhere along here for a profit. And this was one I took short on the SPY right here. See, it's red, red, current time for momentum, selling. I come below the VWAP, I take it right here. I come down, I'm out right there. They're very quick. And then as it broke back up again, see, it went from red selling to blue buying, and it breaks above the VWAP and the 15. I take it long right here. And I take it long and I take it up till it gets close to the pivot point and I'm out. So I took it short, I took it long. Okay. And another one here. So just so you can see how this works, you can see the colors changing. You can see we're short over here. This is where we want to go short as it breaks down, coming off the 15 EMA. All right. So those are the SPY super system trades. Here are some of the regular trades we've taken. These are swing trades, intraday trades. Not looking for not looking for intradays on the ES or the SPY or the IWM. These are regular stock trades. This was Nike. This is what we took. We get in this on 328 right here. This is where we took it short on Nike. You see how it's everything's red. You see how it's breaking down. The VWAP does not matter here. We don't use the VWAP on the daily, but it's coming out of compression and breakdown. So we took it here. All right, we stayed in it. Some folks took some profits on this candle. I stayed in it, and then here comes the tariff news. This is where we took this massive $9 profit on this move down right here. The institutions, you can see they're selling the whole way across here. Right, so there was no reason to get out. Sarepta, we also took this one right here as it was compressing. We took it, everything's red. The institutions are selling the heck out of stuff here. We take it here, and we got out of this on 412, gap right down here, and we took it off right there. That was another nice profit. HIMS, this was a nice long that we took. This was back in February. Probably should have grabbed it back in here, but I didn't. I took it here on 2.7, and it moved up nicely. It was staying above the 15. These are Heiken Ashi candles. I'm getting flat bottoms, flat bottoms, flat bottoms, flat bottoms. And I took it off for 25%, and then I left the runner on that went up. You know, I took it off pretty quickly here, and then I left a runner on, and the runner was at 269%. Kind of a crazy trade right there. Not something that happens very often. Palantir, daily chart, selling yellow, buying green, already buying in the current monthly time frame momentum is where you get in right there. As it breaks compression, pops to the upside, and you're out in 2 days for a 31% profit. Right, there's Twilio. So I think you can see what we're talking about here. This was Twilio. We actually bought it on this next candle. Again, it goes green. This is green already. We're just looking for an entry point. We get one right here, and we take it and ride it up for 58% in 2 days. Lulu, gap down. So again, you can see all of this. Here's the current time frame momentum showing red. Red is selling. This is earnings, gaps down. They're selling it right here. So I'm looking for an entry somewhere. I probably could have taken it here, but it was kind of extended. It compresses. This is where I take it right here as it breaks down. And that was a nice trade. In for 192, out for $3 overnight. Just an overnight trade. Amazon, this is an intraday trade, a 5-minute trade. on Amazon. You can see they're buying, see the green, and this is where we get in. As it comes along the 15, I grab it here. Probably could have taken it here, but see it was yellow. I waited till it went green and just wrote it up. 32% in 45 minutes. All right, so those are most of the charts. I don't want to just keep on going over charts. You can see what the SPY super system will do for you. You can see how it identifies the trades, how easy it is to trade these things. But you have to know what to look for. You got to stick to your methodology, stick to the strategies and the criteria, and you'll do fine doing that. All right, so this covers the strategies we use in the room: straight calls and puts, straddles and strangles, non-directional, debit spreads using weekly options, time spreads, over earnings. This is how we capture the volatility crush, weekly ATM strategies to capture premium and week after week, and credit spreads, and then the SPY super system. So these are all the strategies that we have in the room or on the alert service. These will not be alerted on here because I just do them in the room. All right, so that's what the SPY super system in the room is what we do. The room's open every day from market open to market close. I'm in there all day long. I take lunch, but I'm answering questions and I'm posting charts all the time. And people can ask me to post trades. I'll do that, and I'll go in and look at the chart and we'll analyze it. People will tell me what they think we want to buy, and I get a lot of my trades from members in the room who are looking for high probability trades and see that. All right, so the room is open all week, Monday through Friday, market open to market close, and we do a ton of education in there. I've got about 30 videos out there that you get if you sign up on all of our strategies, all of the indicators, how to use them, the 11 most common mistakes that retail traders make, how to trade the indicators in the SPY super system, how to use time spreads, etc. All of that is in there. So this is what you get. If you want to get a 2-week trial, you'll get options with live trading room. You get access to my room and the alert service. You get the videos. You get to see the videos. There's about 30 of them, and it's free for 2 weeks. After 2 weeks, it rolls over to a quarterly subscription, $396, which to me is really, really cheap considering the results you see we're getting here. Okay. And these you would be able, if you're in the room, you're obviously going to see the SPY super system trades that we spot and take because you'll be in the room. That's what we talk about them. If you want to save some money, that's $396. If you take it now just for a year with the trading room and the alert service, $11.96, which obviously is a lot cheaper than 4 quarters. But again, you'll get text alerts, you get the trading room, you'll get a private Discord community. We've got a Discord community with 2 additional professional traders in there all day long, posting charts, answering questions. You can go in there and even talk to them with audio. They will do analysis of sectors, analysis of economic information that comes out in the morning, all of that, and plus all the videos that we have, about 30 or even more right now. $11.96 for a year. And if you want to do this forever, you can get the room and the alert service with everything else here. You can get that for $24.96. One-time payment, never have to re-sign up. So that's again forever. That's a pretty good deal. And then if you want to buy the software, the SPY super system, this is the actual software that we show on here. That's this right here. This is the SPY super system software, and it comes with it does come with scanners. That's the Compass trading system, high-tech market scanners, the master class on the way to trade options. It's installed by Brightline. They'll take over your machine. They'll install the software on your machine. You don't have to worry about it. It'll look exactly like mine. Any future upgrades you get for nothing. Any more scanners you get for nothing. All of that's included. And you also get a month in the Options 5 trading room to try it out, and a month of the as text alerts to try it out. $14.98 for that software, which is really, really, I'd be lost without this software. When I found this, which before I actually started the room, it improved my win rate from about 82 to 88%, which is, believe me, that's significant. And then one-time payment, if you want to buy the software and have it forever, $500 more gets it to you forever. And if you've got the software and you just want to trade yourself, you can just trade off of that. You can look at the videos, figure out how to do it, come into the room for a month, learn what you need to learn, and then you've got the software and you can trade on your own. That's the whole point of it. All right, so if you have any more questions here, I'd be happy to answer them. If you have any questions, you can call 786-732-4656. Again, here's your training room. Training room in the alert service for 2 weeks for free, and it goes to $396. This is it for a year. You get the room and the alert service and the options classes, basically the videos on how to do all of this stuff. And then the one-time payment, you get that for $24.96, and the software. We have a lot of people buy the software. Most of the people in my room actually own the software. But I do post it up in the room all day long. I have the Spy Super System sitting there all day so we can look at it. Perry, where can you listen to it? Yeah, you're gonna get a recording. Yeah, probably tomorrow on this. They have to, it has to be rendered and then it has to be set up and then it'll be sent out. Right, so anybody who's looking for a video in this, you'll get a copy of it. A webinar, the webinar will be recorded and you'll get it. All right, any other questions? I'd be happy to answer anything. Anybody's got questions on Heiken Ashi, or they got questions on the Spy Super System software, etc. I hope that Heiken Ashi was helpful to you today. I try to make this as useful as possible. All right. So again, that's what we're looking for. And I appreciate everybody being here today. Thank you so much. Perry, yeah, in your email. People wondering how they're gonna get the replay. It'll be in the email. You get an email of it, and with the link, you just click on it. Doug, thank you very much. Great info. Thanks a lot. Appreciate that. So again, inside the chat box here, let me check. There should be, yeah. There's some links to all of these: 2-week trial, the annual, and the lifetime for the trading room and the alert service, and the 1 year and the annual and the one-time payment forever on the Spy Super System software. All of those links are in the chat box. You just click on them and get to them, or you can just call, and they'll be able to go over it with you. And again, I'm in the room all day long, so if you come into the room, I look forward to talking to you. Just introduce yourself, let me know that you heard me on the webinar and coming in to try it out. I'd be happy to answer any questions that you have, any specific questions, because we try to be very helpful to try to help traders become better. I mean, that's a lot of, somebody will ask a question, and so a lot of times it applies to a lot of other traders. And finding the trades to take are really important. This Costco trade I showed you on the daily, the Tesla shot that I showed you on the 5-minute chart. This is how we trade these things, right? So here's Tesla going up, and where do we find the short? This, by the way, is breaking down below the 200-day moving average in the daily when this occurred. So that gave me an even higher confirmation this is something I wanted to do. All right. Carol, can we get the forever price after we get the 2-week trial? I think you have to talk. I suspect that they would do that for you, Carol. But you'd have to ask them, because I don't set the pricing on that thing. But you can just ask them. What options do I trade in the 5-minute, Lee? Typically, what I do is it's kind of tiered. What I'm taking on, if I'm doing a Spy Super System trade where I'm just trying to trade the index, I'm going to buy either a slightly in the money call or a put, slightly in the money, right? And it's going to be, if I buy it or sell it, if I'm buying the call or the put prior to 1 o'clock in the afternoon, I'm going to use 0 DTE. I'm going to use today's expiration, current day's expiration. After about 1 o'clock, I shift to tomorrow's expiration. Not because I'm going to try to hold that SPY overnight, but because I want to try to mitigate some of the time decay if the stock decides to go against me or go sideways. Okay? Does this work on Thinkorswim? This is This is Thinkorswim right here, Carol. This is the Thinkorswim platform. You don't have to trade on Thinkorswim, by the way. I don't trade on Thinkorswim, but I have the software loaded on Thinkorswim, so that I can get my indicators and my SPY super system information, my institutional information off of there. Then I make a trade off of Tradier. But this is where it goes, is on Thinkorswim. Yep. 1 o'clock Eastern time. Yes, yeah, 1 o'clock Eastern time, Glenn. Yeah, I mean, it's not cast in concrete. You know, if it's 1 o'clock, I may still put on today's. Depends on what the market's looking like. But once it gets past 1:30 or so, and I've got a couple hours to the close, I'm going to switch over to 1 DTE. I don't want to do it too soon because you end up paying more for the options. So your ROI is going to be a little bit less, but you're also protecting against any kind of downside or time decay based on compressions. It's not so bad if it drops because you're going to get out, but if it compresses for a half an hour, the zero DTEs are going to start losing some value. Yeah, Carol, yes, it does work in Thinkorswim. You don't have to pay for Thinkorswim. You can get the platform. I don't know if you have it or not, but if you don't, you can put it on your machine, and Rightline will take over your machine and put the SPY super system software right on there, and it'll look, like I said, it'll look exactly like mine. The scan stopped working because it's market that they're doing some maintenance on Thinkorswim right now. All right, so there's Tesla, and while I get this, let's take a look at the SPY and see if we can identify any trades yesterday that were good SPY super system trades. Here's our open. All right. Right, jobs report was great, right? Big jobs report. Market ripped up right here. Everything's blue. And it just kind of compresses. Nothing really here too striking. I mean, you're getting some breaks above the VWAP, but this is not great price action. See how small the candles are? Candles are a little bit smaller. They come back below the VWAP. Then it gets above the VWAP. You could have theoretically taken it right here as it breaks above the VWAP for trade. This is Heiken Ashi candles right here. So you could have taken it right here as it broke above the VWAP and get out of it right here. But there wasn't an awful lot of great opportunities yesterday for trading the market. Now, this was a pretty good one here. It's coming down to the 15 and the VWAP right here. Heiken Ashi reversal candle right here. Blue on the current time frame momentum. This you could have taken. And this would have given you, I didn't take this one, but this would give, I didn't take it because the price action was so choppy before that. You know, this was, you had a big move down, a little move up, a big move down. So I didn't feel comfortable with the context of the market, but this was a beautiful trade right here. Because if you took it right there, it moved up. Now it went yellow, but the price action was still good. And then it went back to blue and green. And you had a big run up here. I mean, that's a pretty nice run on the SPY from about 565 to about 567.80, almost 2.5 points. That's a pretty big run. Any sign up for the trial? Yeah, there should be a sign up for the trial, Carol. Let me look at the chat. Where'd the chat box go? Oh, there it is. Yeah, if you go to that first link, that has the option in there for the free trial. So you can just take it right from there. Doug, yeah, you're talking about this breakout here. See, that it's tough to take it I didn't take it yesterday because of the price action. You know, I didn't care for the price action here. We had a big gap up, and then it was very choppy. It's coming down here. This is a SPY super system cutoff. I didn't take it because of this, right? And then once it gets away from you, it's too late. So I didn't take it. But if you were, following it, it would have been a good. This was probably a decent one here. as the market was starting to come down. I have to look at the daily chart and see where we were as far as the indicators and the moving averages were concerned, but that was a pretty nice one right there. But again, it's only 2 or 3 candles, but that was probably big enough to do that. But I didn't take this one in. The reason is because it was too much chop and compression before that. Oh, easy in hindsight, always. Always easy in hindsight. I can pick out some beautiful trades after they're over. getting them when they're new, that's the tricky part. But again, you've got the right tools to try to find them, and that you don't have to take them all. I mean, I didn't take any SPY super system trades yesterday at all. I took Tesla a couple of times. I took MSTR once. I took some straddles, but I didn't do a lot of trading yesterday because the market gapped up off of that, moved up hard off of that jobs report, and then just kind of was chopping around for a couple of hours. I don't feel good about that kind of price action. That's called context. And the context of the market was not great for trading. I mean, you can look back and say, yeah, I could have made a fortune if I traded it this way, but we can't trade in hindsight, unfortunately. There you go, Carol. Brock took care. He put that link in there for you. Appreciate it. All right, everybody. Listen, thanks so much for coming today. I appreciate you spending so much time here with me. I hope the Heiken Ashi candles information worked, helped a lot. Again, if you come into the room, you'll get the videos. A video on the 11 most common mistakes retail traders make, I think, is really good. I made them all. It's easy for me to identify. In my career, I've made all of those trading mistakes and identified what they are, why, listen, most of them come down to emotion. Over trading is typically emotion. You're over trading because you're antsy, you're impatient, you get bored, or you've lost money on a trade. Now you want to make up that loss. So now you start taking bigger size on a trade that's not a good trade, and it's emotion that's driving the trade. You want to have as little emotion as possible in your trading. I mean, trading should not be like a ride on Space Mountain. You shouldn't be just ripping up, having adrenaline driving you up and then depression driving you down when you lose money. It should be as flat as possible as far as emotion is concerned. Like, again, it's a video game. We're trying to beat the other retail traders. We have got the best information to trade with that there is out there. We've got the best strategy. We have the best tools. We've got the SPY super system. We know when institutions are in there. We're trading relative strength, relative weakness. Most traders, 99% of retail traders, don't know any of this stuff. They don't have the information, and that's who you're trading against. You're going out there attacking with jet fighters and tanks, and they're coming at you with pea shooters. They're going to lose. That's in the long term. They're going to lose. All right, everybody. Have a great afternoon, great Saturday, and look forward to seeing some folks in the room on Monday morning. Have a great one.